the stock, as a result of which down almost 3% in today's trading session. We have with us the MD and CEO, Vaidyanathan, joining in to tell us more. Thanks a lot, Mr. Vaidyanathan, for joining in. First up, Diwali greetings to you and your team as well as your family. Now, let's talk business. As far as the slippages are concerned, over 1,000 crores, closer towards 1,200 crores this quarter. It's elevated. How long before this goes out of the system? What kind of annualized slippage ratio can you guide from here?
I think you're just looking at only one part of the parameter, and that too. Now, the way to think about it is that the best way to understand the upcoming asset quality of any book, not just the NPA. As you know, the NPA of the bank or the retail business has come down to 2.06% gross. And the net NPA of the retail business is 0.7%. I think you should take a closer look at that as well. But the even closer look you should look at is the look at the SMA business, as all of you understand the financial terms. Now, in the SMA business, which is a pre-NPA stage, it is down to 1%. 1% of the retail SMA. So you can understand there's not much to flow from here to there. So in the nature of a business, something flows, something writes back, or flow back. That's part of life. So I want to just tell you that our provisioning coverage ratio on the retail book is now 77%. So you should look forward to actually lesser slippages. You should look forward to lesser provisions from the bank going forward.
So let's simplify that for our viewers then, because there are so many moving parts, as you said. What kind of gross and net NPA are you guiding for by the end of this year? And on an annualized basis, credit cost, do you think you will do less than 1.5%? Because a couple of brokerages are building in 1.6 to 1.8% for the next 2 years.
Yes, I think now you come to the right question. So basically, the right benchmark is credit costs, and the right benchmark is gross NPA and net NPA. So let me address the credit cost question. The credit cost question for this quarter was only 1.2%. And those people are guiding for 1.7, 1.8. They will just say they are guiding on they're factoring in a higher amount by their whatever. But from our point of view, for this financial year, we expect the credit cost to remain low for the rest of the 2 quarters as well. So that's on the credit cost front. Now, NPA. On the NPA front, I told you retail NPA has come down to 0.7% on a net basis, which we feel very good about. And more importantly, even at a bank level, I don't only get focused on retail. Even at a bank level, if only you take out infrastructure, because we all know it's a legacy stuff and it'll go away in due course. Take out infrastructure, gross NPA will be 2.2% even now. And net NPA is, about 0.7%, ex-infrastructure. So really, let me just say that any which way you look at it, whether SMA, credit cost, gross NPA, net NPA, whatever, the bank is smelling very good now.
All right. Morning, Mr. Vaidyanathan and Nigel on this side. Thanks so much for joining in. Well, we're taking the numbers down and, we're taking your point on board as well, which are the correct as well as which are the incorrect questions according to you. But I have a crucial question.
Nothing is incorrect. Nothing is incorrect question.
Okay.
But I want to just clarify that gross, net, and credit loss are the
We have got that. We have got that.
Yeah.
I wanted to focus on your NIMs. They're closer to around 6% odd. Now, you have a sizable legacy borrowings, which is high cost, which is being replaced by low cost new borrowings. In turn, that will be good for NIMs. I've gone through your presentation out there. My question to you is, could this repayment take up a significant part of your new CASA, your new FDs? And also, would sufficient liabilities be available for future growth plans? Go ahead, sir.
Very good questions. Because if you notice, something is interesting about the way we're building a bank. Our loan book grows by 25, but deposit grows by 37. So there is a reason for that. So we take our deposits and we use a part of it to even, keep paying the high-cost bonds as they come along. And we also use deposits to grow. So frankly, we've grown deposits 37%. Even into the rest of the year, we see our deposits growing very strongly. You can see the results for next quarter. You can see the results quarter after that. We feel very, basically, inflow of money into a bank is very, very strong.
So you're saying that the NIMs will continue to hold around this vicinity?
Around the vicinity, like 5.8, 5.9, 6.
5.8 to around 5.9%? We can hold on to that number?
Yes, definitely.
And loan growth?
In the corridor of 5.8 to 6 through the rest of this year, you can expect NIM to happen. You can expect deposits to come. You can expect loan book to grow.
Sure.
It's all coming.
And loan growth of around 25 to around 30%.
No, I never say that.
No,
I normally say 20 to 25 is what we guide
20
for.
to 25. Got it.
Okay.
Yeah, right now it's coming at 25.
20 to 25 is the loan growth. Just wanted to understand a little more on your savings account as well. CASA currently is at around 51.3% of your overall deposits. You had earlier a target of just around 30-odd%. Where does this number settle going forward? What do you think would your absolute or rather ideal borrowing mix be?
Well, at around 50%, we're very happy.
Okay.
If it comes anything above that, it's a bit of a bonus, but we are quite happy. We like to keep raising deposits, term deposits as well. So think of it like we stay in the current mix.
And what proportion of your funded assets are currently fixed? How much of that are variable?
Variable is about 38%.
30%. All right. Mr. Vaidyanathan, besides the bank's operational performance is another sticky issue. What's the plan on the IDFC Limited potential merger with the bank? We had chatted the last quarter as well. In August 2022, you said that there are some procedural issues which were pending on the merger front. What's the plan? Any update on that front?
Really no update on that front.
So, should we assume then that it has gotten postponed to the next fiscal, or is there still hope of it happening in this fiscal?
No, I can't specifically answer any questions on this front. As you know, both parties have said that the intent is definitely there. But as and when the procedural matters materialize, things will happen.
There's plenty of speculation out there, Mr. Vaidyanathan. So we ask you. So, by when will a decision be taken? If you could give us a timeline at least.
Hard to say, and I really don't want to comment on that front.
Okay.
Because see, when parties agree conceptually, procedure takes its own time. I really don't want to put a date to it.
Okay, we'll have to probe you on that maybe the next time we chat. But I want to also talk about your digital initiatives. I've been speaking a lot about that. Again, I've gone through, a couple of notes that you'll have put out. I'm keen to understand the growth in the app downloads. Could you give us a number, if at all? Your website logins, or maybe the growth in the website app-based transactions as well, just to get a sense about the next big thing. That's the digital push.
Definitely, I think our bank has building very good stacks to make it happen. I think we have close to about 5 million downloads now, which is not a small number. Our Google rating on our app is really very good. Generally speaking, you talk to any customers about our bank, they'll tell you good things about our bank in terms of their experience with us.
Right. Okay, we take that point. But, while you are growing your digital penetration, etc., you are also looking at reaching your branches to around 800 to 900, this as compared to 650, 670 that you have right now. What explains that? Is there any scope for rationalization there? I ask this primarily because the big trigger that everyone's pinning their hopes on for IDFC First is reduction in the cost to income ratio. How do you take that, in your favor going from here?
See, the short answer in branches is, of course, we will stay on our path of the target of maybe 800,000 branches we put out in 2025, etc. That plan all stays. We don't change strategies like this every day in and day out. That plan is broadly on. Whatever we said at the time of the beginning of the merger, 2019, let me say into 24-25, every one of them we're on track, including branches. Let me do that. But let me leave it at that. But coming back to your more substantial question about cost to income and all that, you should actually remember that we are a 5-year-old bank. So, you're comparing us with banks who have been there for 25 years and 30 years. So our bank is making rapid strides. So those banks are not exactly borrowed 8.8%, 25,000 crores.
No,
those banks.
We take your point. We take your point, and we're comparing you to only your own guidance and not other banks, because you said that you intend to reach this number by 50 to 55% by FY25. Currently is 73%. So where does it? Yeah. So can you give us a glide path?
I got it. So I appreciate that. Now let's just come back to this specific question about cost income. See, we've already put it out publicly that just 3 items: the credit card launch, the launch of branches, ATMs, network, hiring of about 15,000 people to man those branches, etc., or handle those branches. All that has costed money in the setup stage. Our theory is that by 24-25, most of those the investments will start paying back. That's how the model works. So our understanding that our return on equity, which is right now touched 10% pretty quickly, as you notice, from 0 to 10 in 3 years, our return on equity adjusted for all costs will start crossing 15 by end of, as per the guided plan, by the exit quarter of FY25 or so. So we feel that this bank will not even stop at 15 ROE. The core economics are such that it will take us towards more like the 16, 17, 18-ish ROE. But we will get there.
Okay, all right. We have got that, Mr. Vaidyanathan. You have given us, a fair bit of details. And to be fair, the last time we chatted, you guided for a couple of numbers, and you did achieve that. So we look forward to chatting up with you sometime during this quarter, or maybe we have our date with regard to your Q3 numbers as well. Wishing you all the best.
Thanks to both of you and to all viewers of CNBC. A very, very happy Diwali. And we look forward to engaging. Thank you.
Appreciate you stopping by, sir. Well, for the time being, though, we'll have to slip into a short break with news that the markets have moved a little bit lower. We'll come back and we'll get chatting with the management of VIP. We'll also get you our MC Pro stock as well. Stay with us.